Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that dump on the Bitcoin chart. And guys, you can see that altcoins are bleeding this week with an average of approximately 20% down, it looks like. Now, some things are starting to pop off and they may be front running a little bit of a sideways action to perhaps even a mean reversion on the BTC chart. Guys, if we do go over to the BTC chart, we can see that historically on the daily here, we have been getting nice bounces off of the 300 and the 200 EMAs. And so we got a nice bounce here, bounce here, bounce here, 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 here. And then, of course, what has the market in a bit of a tizzy is that they believe that, we may have a chance to pull back now into that 200 to 300 EMA, which currently sits around 45,000 to $40,000, and that just has the bears just rubbing their paws together, just greedily looking to the downside, and the rest of the market in a bit of fear. If we do go ahead and take a look at some of our structure, we can see that we do have that big trend line going on way back here since the 15.5K bottom. We then had a nice diagonal double bottom here around 25K, and so of course that would also suggest a very low area where we could potentially touch back should we just continue with a catastrophic dump somewhere in that 40 to perhaps upper 30s region. Now, guys, personally, I don't believe that this is going to be the case. In my personal opinion, we are starting to enter that parabolic phase of the market where just historically we don't end up coming back too deeply. And so while there is a chance that we could, pull back into these deep value areas of the 40s, it just is very unlikely. Now, since we are still a bit early in this process, yes, you can see right here in 2020, we did have a considerable pullback of approximately, let's just go ahead and measure that one, 22%, which just reclaimed everything on that first pump to the upside before the real bull run got started. But that was before the market had broken its previous all-time high. And we have already broken our previous all-time high. And we did not get that type of pullback back to the 200 or the 300, after we had broken that all-time high. And in fact, if we go to these past markets, you can see that while we did get a touch back to the 200, we never came close to the 300. And in fact, some of these upper levels really didn't even come close to the 200. So, yeah, I mean, of course, historically speaking, it was a bit choppier than it is today. And recent evidence suggests that that's not likely to pull back that deeply. Now, let's just see how far of a pullback we have had already. It was approximately a good 18, 17%. So should we just do about 20%, that would bring us somewhere around that maybe 58K level. And, if we did something just very extreme, like maybe a 30% pullback, then that would be in the let's just say 50K area, perhaps somewhere around this node. Now let's find out, is this a realistic expectation? And we can go to my Alpha Origin channels here, and the Alpha Origin channels have been treating us pretty well, especially on the weekly and the 2-week. We go over to the 2-week here, and you can see just how we really bounced around, just kind of straight from the bottom to the top, straight back to the bottom, kind of hit the mid zone, back to the bottom, back to the top, broke out, double topped, checked back to the mid where we did get rejected before, flipped that bullishly, flipped this level, flipped this level, flipped this level, and now it looks like we're just flipping this level here, somewhere around that 58K. And in fact, where did we wick down to? Not really the critical support that I would have liked to see us flip to be a little bit more confident that we're holding this area, but rather we did touch 59 here. But if we were to come back to this area, because it is on a uptrending parabolic logarithmic scale here, that would still put us in that 58 to 59. So should we have a touchback in that area, or even just explore this blue zone, you can see that historically speaking, That's been pretty supportive when we do have a pullback right there, just a hair above that blue zone, right? Here we had a massive pullback and we just went to the bottom of that blue zone. And then even when we were breaking down, we really got stuck in that blue zone. And in fact, here also you see this wick getting stuck in this blue zone. So do I think that we're going to break this blue zone? In my opinion, no, I don't think so. So in my estimation of how the market is currently oriented, I would suggest that, maybe we get a check back to that kind of 58K, perhaps put in a little bit of depth to the middle of this zone, like 55K, that would be fine. And then I would think that the extreme would be that 53,000, maybe 51,000 if we just kind of bleed in and then bounce back up, which you can see happened back here in September 2021. We just had a wick all the way down into the lower channel there, and then we quickly reclaimed it, just extremely quickly reclaimed it. And of course, this pullback over here in February 2021, it didn't even touch the zone, so we could be in the clear already. Okay, so you guys have to be open-minded to the possibility that let's just go back to the daily here. You guys have to be open-minded to the possibility that yes, we could check back into these lower areas, right? Something, it might look like this or something, right? And then we're gonna perhaps skyrocket, maybe even to 80K. Or alternatively, we're just going to, kind of, flick down into this zone and just go sideways and then up. And then also the possibility is that this was the bottom right here, and we're literally just going to explore perhaps between 60 to 65K. And if we flip 65K where we do have the daily 21, then probably we're going to quickly take out 70K, maybe 75 to 80K very quickly. If the past has anything to say about it. Guys, right now we are under that 21 EMA on the daily, and while this was just kind of like a flash in the pan, the fact that we broke down again under the 21 EMA is a little bit, it's a little bit risky. Okay, so if you're a little bit risk adverse, you can see that there's no harm and no foul in just waiting until we get back above that 21 EMA, somewhere around 66,000, let's just say, if you want to be solid on solid ground there. And if we are able to flip 66,000, then, no matter what we do down here, as long as we flip back up there, then probably, we're going to make our way back to the north side there. But until then, we are at risk of squeezing to the downside because we will also have our 9 EMA here setting up this bearish squeeze to the downside. And that could, again, just take us to some of these lower levels. The next reasonable target would be 60K, and then 54K should you be targeting the 89 EMA there. And that's all within that range that I talked about. Now, if this is a catastrophic fall, obviously, of course, we do have that 200 down at 45, and of course the 300 down at 40, and that would be the bottom of the range below us. Do we have any reason to suspect that we could do that? Well, yeah, we did do that in May 2021, where we squeezed all the way down here, but the top of the market was pretty much over in that case, and it would be a little bit premature to call that without some type of topping structure, some type of distribution structure at the top of this market, and we just haven't seen that. This kind of a distribution, top here, the way that we have this kind of double top, the way that we have these 4 peaks over here, that allows the big players to exit their positions. So they mostly exited here, and then they drove the market down, they drove it back up so they could exit the rest of their positions, and then we entered that bear market. And so we don't see any type of a topping pattern. And so those guys who are calling that this market is over already, I think that they are dead wrong. And while we did drive down to these super low levels when we did have a topping pattern, we didn't do that when we did not have a topping pattern. The furthest that we went is this kind of mid-channel area here. And so right now my projections are, lowest 58 to 55 to maybe, at an extreme 51. And then I would just expect a reversal back to the upside. And that would be a really good discount area. Now, if we take a look at our local trend. Let's just jump down to the 4-hour. One other worry that's on people's mind is that we are putting in this trend line here that is setting up a bit of a head and shoulders. Okay, so you can see this head and shoulders, shoulder one. Here's the head, and then we're sort of filling out that second shoulder there. Which could suggest a measured move to the downside. And that measured move, let's just say that it takes a little time for us to jitter down there. That measured move could take us down to that lower target that I have of that 51K. So even if we do end up pushing back up in a mean reversion, we could still end up losing this trend line overall, and then that would suggest an implied move to perhaps 51,000, where likely, as I said before, that we would just find our footing and just skyrocket, maybe even taking out 75 to 80K, which would be quite nice. Now, in the last video, I did say that we were likely to get to 70 to 80K, and here we got to 73K. So, take it with a grain of salt, my advice, but I have a pretty good track record on this one. Let's go ahead and just take a look at other factors that could be in play here, just in this local region. Of course, this is the pattern that you're kind of looking for. If you do see us losing that 200 EMA on the 4-hour, and then especially if we lose the 300 EMA on the 4-hour, that would suggest that we're probably going to fill out this zone here, okay, down to 52, 51K, and that would be your signal that there's a little bit of a squeeze going on here, and that could be a tough nut to crack to try to break back into this market. We could go sideways for quite a while, especially as we have the monthly and the quarterly closing coming up. It could look like an ugly next quarter. So hopefully we don't break down by the end of March. And then after the quarterly closing, we just close bullishly up here somewhere. And, then the market can do whatever it wants to do and probably just skyrocket randomly. Let's go ahead and take some of that off the table there and take a look at see what our fibs and volume is saying. We do have a lot of volume around the 50% of the retracement since we fired up on this impulsive move, this kind of 5-wave structure from basically 40,000, where I was telling the Alpha fam and everyone watching this channel to just take a chance down here based upon some bullish structure. Of course, if you did take that chance, you were highly rewarded with this move, this 5-wave impulse to the upside. And now if we're in an ABC correction, then, it could be done here. This could be 1, 2, 3, right? ABC, or this could be part of another wave that then just takes us lower, right? And just takes a little bit longer. And then that would give you that double top. And that double top would also have that measured move to the downside, right? To those lower 50s. And then that would be a pretty big correction where we could either fire off from there or we lose our footing in that 51 area and perhaps explore that 40 area where we would be in a deep discount, right? With the 618, the 786, and the 886. And, that would be where the market probably would step in to buy again, assuming that this bull market is not over. And it probably wouldn't be over. That would be probably just a temporary lull. What could cause that? Well, perhaps the dollar just finds some strength as Europe starts to lower its interest rates. If we take a look at the US dollar, we can see that it does have this this kind of flaggy formation here, this kind of bullish structure. And should we reclaim this upper channel right here, this thing could have a blue skies breakout, perhaps targeting its previous all-time high even, or some type of resistance underneath there. And that could put a lot of pressure on anything traded against the dollar, including BTC. Guys, I'm not necessarily projecting that at the moment, but it does look like Europe flinched before the US did in terms of cutting interest rates. And that means that the dollar is the better value compared to the euro, which means that there's going to be a lot of money fleeing into the dollar. And perhaps, depending on what the European Central Bank decides in April and June, that could get to be a little bit heavier pressure. So we do want to pay attention to our trading pairs, which in this case is the US dollar. And since it's BTC USD, we're trading against the US dollar. If the dollar rises, it just makes it harder for the rest of the chart to keep to the upside. So let's jump ahead. Let's jump back to BTC and take a look at what that would look like. See if the dollar continues to rise, that could put pressure on Bitcoin to just drop here to these lower channels, and then maybe the dollar would double top or max out or something, and then BTC has the chance to fire up again. So that's a little bit of a macro theory there, just to kind of buttress this idea that might be happening. That could happen faster than you think because, again, the European Central Bank is meeting in April. But in my opinion, I think they're not going to make that decision until probably June. And that would allow BTC to bounce here. And then maybe in June, we start getting that pressure. And maybe that's when this kind of 80 to 90K area becomes a toppy zone. And maybe we get that deeper pullback before eventually finishing the market by the end of the year. I mean, I guess we could double top in that area, or we could, just continue to push up into beyond 100K, right? Those beyond 100K zones, which we can talk about in a later episode. But right here, these are the areas of interest that you are going to be looking for in terms of your volume. That 51K. Of course, if we flip 66K, that's going to be quite bullish. And then, we have our deep discount fibs in those lower 40s, mid to lower 40s, which personally, I don't think we're going to get on this move, but is possible on a future move, especially depending on what that macro Forex policy is happening with the central bank in Europe. Let's go ahead and look at the local area just to see on the day, what the setup is. And you can see that we have been having this falling wedge. Now we've been talking about this in the group, and we've just been watching this really beautiful 5-wave structure form. We did catch that breakout right here. We caught the re-entry and then the breakout, but unfortunately it's fizzled, which sometimes happens with falling wedges. And right now we're just kind of making a little bit of a double bottom. So as long as we hold this area and these bullish order blocks down here, and then flip above, let's just say 64,000, probably this mean reversion can happen and maybe even take out the bearish order block somewhere around 68,000. Guys, I think that we can give you a better perspective on that if we take a look at just some microstructure that we have going on here, perhaps on the hourly. On the hourly, we do have a falling wedge itself with a targeted move, perhaps here up to 67,000. And then if we are able to take out that area, we're likely to fill this inverted head and shoulders, which then would have a measured move to 75,000. So this is how we'd get from this low down here all the way up to 75,000 and even take out our highs here. So again, like the bears have some work to do because we're starting to build up some bullish structure here, okay? And we also have, we have this very long distance, okay? So it's actually all the way back from the end of February, a 12-hour hidden bullish divergence here from this low to this low, assuming we don't break down here. But if we are able to hold this area, that could be enough to take us back to our highs. So I think that these targets are fairly realistic. And then if we put in bearish divergence, that could be what ends up making the big move to the downside and just resets the chart. If you do want to put some type of key levels to that, of course, we do have my alpha momentum pools. And, for the 4-hour here, which is closing in approximately 3 hours, what we're going to want to see is that we mostly hold this bear zone above 63,000. It's okay to just wobble around it, but we'd like to just kind of eventually flip this 4-hour 21 EMA, basically the Bollinger Band midline. And even if we play with this area down here, eventually get on top of that 21 EMA in this momentum pool area, flip 64,500 to add momentum, take a stab at the volatility pool pivot somewhere around 65.5. If we reject that, then maybe try again and eventually target that 69K area where we do start getting into that, where we do start getting into that area where we are potentially flipping that 70,000 based upon the smaller formations, and then perhaps even that 75,000 later on in the week, or perhaps even into early April. Guys, I think I'm going to end it there. This episode has been long enough. Basically, you can see that we do have this bullish structure. Okay, we have a bullish structure. We have a bullish 12-hour hidden divergence, and this is going to give us the chance in this local region to turn this ship around. Of course, if we're not able to do that, then you do understand our targets to the downside could be, in my mind, as low as 51,000. But to the upside, our targets are as high as 75,000, and that will do it for now. Guys, that's your alpha for the day. Stay safe and happy trading.